Something absolutely insane just happened in the precious metals market. Silver just broke $105 an ounce. And right now, as you're watching this video, major dealers across the globe are freezing orders. They are literally refusing to sell you silver. Think about that for a second. When was the last time you heard of a business refusing to take your money? This isn't a drill. This isn't speculation. This is happening right now. And if you don't understand why, you could miss the biggest wealth transfer opportunity of your lifetime. Or worse, you could be left holding worthless paper while everyone else secures real money. If you're into stories like this, the kind that Wall Street doesn't want you to hear, you need to subscribe to this channel right now and hit that notification bell. I drop content like this regularly. The stuff that actually affects your wallet, your future, your family's financial security. So smash that subscribe button, because what I'm about to tell you over the next 10 minutes could genuinely change how you think about money forever. And trust me, you're going to want to hear the ending of this story, because there's a twist coming that nobody is talking about. Now, let me set the stage for you, because context matters here. For decades, silver has been called the most undervalued asset on the planet. Experts, analysts, and even billionaires have been screaming from the rooftops that silver was being artificially suppressed. They said the paper market was completely disconnected from physical reality. They warned that one day the manipulation would break. People laughed at them. The mainstream financial media called them conspiracy theorists. But here's the thing about conspiracy theories. Sometimes they turn out to be conspiracy facts. Silver has always been money. Real money. For over 5,000 years, civilizations have used silver as currency. The word for silver and money is literally the same word in over 14 languages, but somewhere along the way, we forgot that. We traded real money for pieces of paper. We trusted banks and governments to tell us what was valuable. And now, in 2025, that illusion is shattering. The price breaking $105 didn't happen overnight. It was a slow build, then a sudden explosion, like a dam holding back pressure for years until finally the cracks became too big to ignore. And when that dam broke, it broke hard. Let me tell you what happened in the days leading up to this. Reports started coming in from dealers across North America. COMEX, one of the largest precious metals dealers in the United States, began limiting purchase quantities. At first, people thought it was just a temporary supply issue. Then JM Bullion did the same thing, then SD Bullion, then dealers in Europe followed, then Asia. Within 72 hours, a coordinated pause rippled across the entire global silver market. But here's where it gets really strange. These dealers weren't running out of silver because demand suddenly spiked. They were running out because their suppliers, the mints, the refiners, the vaults, they couldn't source physical metal to replenish inventory. The supply chain wasn't just stressed, it was broken. Now you might be thinking, okay, so there's a shortage. Prices go up. Basic economics. But this isn't just basic economics. This is something far more sinister and far more significant. Let me explain why. For years, the silver market has operated on something called fractional reserve metal. Similar to how banks don't actually hold all your money, the precious metals market doesn't actually hold all the silver people think they own. Estimates suggest that for every 1 ounce of physical silver that actually exists in vaults, there are anywhere from 100 to 200 ounces of paper silver being traded on exchanges. That's called leverage. And leverage works great until everyone decides they want their actual metal at the same time. That's exactly what started happening. Large institutional investors, hedge funds, central banks from foreign nations, they all started demanding delivery. Not paper contracts, not digital IOUs, actual physical silver. And the system simply couldn't deliver. Here's where it gets even crazier. When COMEX, the largest commodities exchange in the world, started seeing unprecedented delivery requests, something weird happened. The premiums on physical silver versus paper silver exploded. Usually the premium is a few dollars. Suddenly it jumped to $15, then $20, then $30 per ounce. The paper price and the real price completely diverged. This created a feedback loop. As the premium grew, more people realized the paper market was disconnected from reality, so more people demanded physical delivery, which put more stress on the system, which caused more dealers to freeze orders, which caused more panic, which pushed prices even higher. Now, I need to tell you something important, because this is where the story takes a darker turn. And honestly, what I'm about to share might make you uncomfortable. But you need to hear it. There are powerful forces that do not want silver to rise. Think about who benefits from cheap silver: industrial manufacturers who use silver in electronics, solar panels, medical devices, and military equipment. Banks that have massive short positions betting against silver. Governments that need people to trust their paper currencies. When silver rises, it's essentially a vote of no confidence in the entire financial system. In 1980, the Hunt brothers tried to corner the silver market. They accumulated massive positions. Silver skyrocketed. And do you know what happened? The rules were literally changed overnight. COMEX implemented emergency measures. The brothers were crushed. The price collapsed. The establishment protected itself. Many people believed that could never happen again. They thought markets were freer now, more transparent, more fair, but here's the truth that nobody wants to admit. The game is rigged. It has always been rigged, and when the little guy starts winning, the rules get changed. So why hasn't that happened this time? Why hasn't the establishment stepped in to crush this rally like they did in 1980? This is the million-dollar question, and the answer might surprise you. The situation now is fundamentally different. Back then, it was two wealthy brothers trying to manipulate the market. Easy to target, easy to demonize, easy to stop. But right now, it's not billionaires driving this move. It's millions of ordinary people. It's retail investors in America, Europe, Asia, South America, and Africa, all demanding physical silver simultaneously. It's a decentralized global movement. You cannot stop millions of people who have simply decided to exchange their paper currency for real money. You can change the rules on an exchange, you can freeze accounts, you can increase margin requirements, but you cannot force someone who holds physical silver in their hands to give it up. This is why the dealers freezing orders is so significant. It's not just about supply and demand, it's about control. The system is losing control, and the people in charge are terrified. Now let me tell you about the twist I promised, because this is where your jaw is going to hit the floor. Remember how I mentioned silver is used in industrial applications? Here's a number that will blow your mind. Over 50% of all silver mined every year is consumed, not stored, but consumed by industry. It's used in electronics that end up in landfills. It's used in solar panels. It's used in medical applications where it's literally destroyed in the process. Unlike gold, which sits in vaults accumulating for centuries, silver disappears. The above-ground stockpiles of silver have been declining for decades. Government reserves that once held billions of ounces are now nearly empty. The United States government used to have over 2 billion ounces of silver in reserves. Today, virtually zero. They sold it all at suppressed prices over the years. So while demand for silver is exploding from both investors and industry, the supply is dwindling. The mines cannot produce enough. Recycling cannot cover the gap, and the stockpiles are nearly exhausted. Some analysts, and I'm talking about serious analysts with decades of experience, are now suggesting that silver could see triple digits, not as a peak, but as a floor. They're talking about silver potentially reaching $200, $300, even $500 per ounce before this cycle ends. I know that sounds crazy, I know it sounds like hype, but let me give you some historical context. At its previous peak in 1980, adjusted for real inflation, silver hit the equivalent of over $600 per ounce in today's money. We're actually still below historical highs when you account for how much they've debased the currency. And here's another piece of the puzzle that most people miss completely. The gold to silver ratio. Throughout history, the ratio of gold to silver price has averaged around 15 to 1, meaning 15 ounces of silver equals 1 ounce of gold. There are points in history where this ratio compressed even further, getting as low as 8 to 1. Right now, even with silver at $105, the ratio is still wildly elevated. If gold is sitting around $3,000, which it is, and the ratio returned to historical norms, silver would need to be at $200 just to reach the average. Some argue that because of silver's industrial consumption and dwindling supply, it could actually become more valuable than gold relative to historical norms. Let that sink in. We might not just be looking at silver returning to normal valuations. We might be looking at silver becoming more valuable relative to gold than it has ever been in modern history. Now, I want to address something because I know some of you are thinking it. You're thinking, okay, this sounds great, but I missed it. It already hit 105. The move is over. I'm too late. Let me be direct with you. That kind of thinking is exactly why most people stay broke. That kind of thinking is why the wealthy get wealthier while everyone else watches from the sidelines. Think about Bitcoin for a second. When Bitcoin hit $1,000, people said they missed it. When it hit $10,000, people said they missed it. When it hit $50,000, people said they missed it. Meanwhile, those who understood the fundamental thesis just kept accumulating. The same psychology applies here. If silver is truly in the early stages of a massive repricing event, if the paper manipulation is truly breaking down, if industrial demand is truly accelerating while supplies dwindle, then $105 is not the top. It's barely the beginning of the middle. I'm not telling you what to do with your money. That's not my place. But I am telling you to pay attention. I am telling you that something historic is unfolding right now. And I am telling you that the window to position yourself is shrinking rapidly. Because here's the reality that nobody wants to face. When the dealers are frozen, when you literally cannot buy physical silver at any price, it doesn't matter what you're willing to pay. The opportunity is gone, the door is closed, and you're left on the wrong side of history. Some people right now are frantically calling every coin shop in their city. They're driving hours to find dealers who still have inventory. They're paying 50, 60, 70% premiums just to secure physical metal. They understand that availability is disappearing by the hour. Meanwhile, other people are scrolling past this video, assuming everything is fine, assuming they'll have time to figure it out later. Those are the people who will be looking back a year from now, 5 years from now, wishing they had paid attention when the warnings were flashing red. Let me tell you one more thing before we wrap up, because this is crucial to understand. The freezing of orders isn't just about silver, it's a symptom of a much larger problem. The entire global financial system is built on trust. Trust that the numbers on your bank account represent real value. Trust that the government won't print your purchasing power away. Trust that when you're promised something, it will actually be delivered. What we're witnessing in the silver market is that trust beginning to collapse. When dealers can't fulfill orders, when the paper price diverges from reality, when institutional investors start demanding physical delivery instead of paper contracts, that's the canary in the coal mine. Silver is just the first domino. It's the most sensitive part of the system, the first place where the cracks become visible. But make no mistake, those cracks run through the entire structure. The smart money, the old money, the people who have preserved wealth across generations, they've always understood this. They've always held real assets, gold, silver, land, things that cannot be printed into oblivion. They smile politely when people talk about the stock market while quietly accumulating hard assets in the background. Now, regular people are waking up. That's what this silver movement really is. It's millions of ordinary folks realizing that the game is rigged against them, realizing that their savings are being eroded by inflation, realizing that the only way to protect themselves is to exit the paper system and hold something real. And the system is responding exactly how you'd expect a system to respond when people try to leave. By making it harder to leave, by freezing orders, by raising premiums, by doing everything possible to keep people trapped in paper. But here's the beautiful thing about physical silver. Once you have it, it's yours. There's no counterparty risk. There's no server that can be shut down. There's no account that can be frozen. It has been money for 5,000 years, and it will be money for the next 5,000 years. Governments rise and fall. Currencies come and go. Empires collapse into dust. And through it all, silver endures. So what happens next? Honestly, I don't know for certain. Nobody does. But I can tell you what the most likely scenarios look like based on everything we're seeing. Scenario one is that the pressure releases somehow. Maybe mining production ramps up. Maybe industrial demand softens. Maybe the premiums normalize and the paper market regains credibility. In this scenario, prices might consolidate or even pull back temporarily. But even here, the long-term trend remains intact because the fundamental supply-demand imbalance hasn't been solved. Scenario two is that the pressure continues building. More dealers freeze. The disconnect between paper and physical grows larger. More investors pile in, accelerating the squeeze. In this scenario, we could see silver hitting numbers that seem impossible right now, numbers that would have seemed like science fiction just a few years ago. Scenario three, and this is the one that keeps some analysts up at night, is that the system attempts some kind of intervention. Emergency measures, settlement in cash instead of metal, new regulations to prevent delivery requests, forced liquidation of positions. This would be the modern equivalent of what happened in 1980. And while it would crater the paper price, it would simultaneously prove that physical metal is the only thing that truly matters. In any of these scenarios, the lesson is the same. Paper is vulnerable. Physical is real. And those who understand this early position themselves accordingly. All right? I've been talking for a while now, and I need you to do something for me because I genuinely want to know what you think about all this. Drop a comment below answering this question. If silver hits $200 by the end of this year, what would you do? Would you sell everything and take profits? Would you hold for even higher prices? Would you trade some for gold? I'm genuinely curious about your strategy because I read every single comment on this channel. Your perspective matters to me and to this community. Also, if you know someone who's been sleeping on precious metals, someone who keeps their life savings in a bank account earning 2% while inflation runs at 10%, do them a favor and send them this video. Not to be annoying, not to say I told you so, but because we're living through a historic moment and not everyone has access to information like this, share it on social media, text it to your family members, send it to that friend who always talks about investing but never actually does anything. This information could legitimately change someone's financial trajectory. And if you made it this far in the video, first of all, respect. You're clearly someone who takes their financial education seriously. That puts you ahead of 99% of people who would have clicked away after 30 seconds. But I need you to subscribe if you haven't already, because this is just one piece of a much larger puzzle. I break down stories like this regularly, the stories that the mainstream financial media ignores or gets wrong, the stories that actually matter for building and protecting wealth. Hit subscribe. Hit the notification bell so you never miss an upload, and I'll see you in the next one where we're going to go even deeper into what's really happening with the global financial system. The question isn't whether the monetary system will reset. The question is whether you'll be positioned correctly when it does. Stay sharp out there.